Okay, we're gonna do a quick. No, it's not that quick. We're going to do like a bunch of videos that are like TGR's bootcamp or whatever, but it just goes into more depth if you like. So this one's going to be on scalping, and it's like the continuation method, but it's only on the 1 minute time frame, but it can translate to all other time frames. So what you're looking for is you're looking for price within a trend. So if on this screen you got price in a downtrend, and then as it's coming down in this downtrend, it's coming down with such bearish force that it leaves. I swear, if this is gonna do that the whole time, it leaves these big imbalances. Oh, that's why. Alright. So it's going down with like bearish momentum, and then it leaves imbalances to be filled. And what we do is we just keep these in our mind, like the fair value gaps, whatever fair value gaps are made. So this is like a good example. So that's the fair value gap. And then all we're doing is waiting for it. All we're doing is waiting for it to come into this fair value gap, and then close below the candle that taps into it. So here you have this candle that comes into the fair value gap. So that's the candle that comes in, and then now we're waiting for a closure below, and that has a limit of 3 candles to do that. So 1, 2, this candle closes way below. So what you're gonna do is you would enter you'd enter by here. And then what I was saying about like the good thing this teaches is how to set TPs and how to set stop losses properly, because these trades are taken off reaction. So what you're trying to target is the next high confluence area. So stop loss you could play about and see what works for you. I always mark my stop loss, if it's like in this example, I always mark it just a bit above this current fair value gap, just so that there's space for it to, if it needs to fill it before coming down, then it can do that. And you don't fill it, I wouldn't put it like by here at just the fair value gap. I always put it a little bit higher just so that it has that room, because that's just how price moves. And then for TP setting, you can mark out you've got a double fair value gap within here. That's probably where I'd mark it, at the very bottom of that, just because like, yeah, it does come in nicely. So even though this seems really simple, if you practice it, then you get a lot better, and it's also quite fun to do if you just keep practicing this scalping strategy. You don't need any other time frame apart from the 1 minute, and maybe like the 5 minute to set, a bias, but more so it will just be on the 1 minute that you're going to be practicing on, and then seeing what happens basically. So in another example, you got let me find one, a good one. Like, the big thing with this is that there's always opposing confluence, so you have to gauge it, and you have to see what opposing confluence matters and which ones don't. Because if you take a trade at opposing confluence, then even though that the rule is good, it's still, you can still get stopped out. So another example, oh, it's not gonna load, is it? Alright, it's good. I would say this is a good example where you have just this fair value gap here. That is a fair value gap. And then if you're trading this live, then you'd wait for it to come in. And that's the candle that taps. And then that's the candle that closes above. So you would take this. Although this one isn't the best example, because for this stop loss it would be quite wide. So I would mark it like there. Like it's quite a wide stop loss. And then the TP, I'd put it to there. Now with this scalping as well, you don't want to be hitting crazy R-to-R trades. You just want like 1-to-1 like minimum. That's it. It doesn't matter if it's 1 to like 1.5, 1 to 2. That's just how this works. So yeah. Alright, so we'll go through some examples just so that you can see what I'd be on about. So this can be done on without any high time frame bias. It's just simple reaction based. So play it. So what it's done is there's been a fair value gap here. This candle is tapped, this candle's closed below, and then all we're trying to take it to is the next confluence area. Next confluence area would be this peak. I mark it to take profit just a little bit lower, and the stop loss goes above this fair value gap. Now we make it so it's a little bit above the fair value gap, not like here at the fair value gap, because it needs space to breathe in it. So we'll play it, take it through, and then how do I describe this? Well, I've just described it. There was a fair value gap tap, right? And then a closure below the candle that tapped into the fair value gap. And then I was taking it to the next confluence, which is this peak by here. And then, yeah, that's it. I mean, this reason why I like this strategy is because it teaches you how to set stop loss properly, how to set take profit properly, and even if you lose, then you can learn quite a bit from losing if you analyze it, obviously. So you can also analyze your wins and why they worked. This is quite a simple and clean structure. Tap, closure below, entry. And this wasn't at opposing confluence. So what I mean by that was it wasn't, when I entered, it wasn't in a fair value gap. This isn't like no fair value gap within here, and it also wasn't at any sort of liquidity peaks. So the reason why it works is because you're taking price into you're taking the trade into the next area where it could have a reaction. So from here, just shorten this a bit. Yo, thank you. Alright, now this was a fair value gap tap, and then this candle closed way below. Is it at opposing confluence? I would say that is opposing confluence, yes, because if you imagine this being a liquidity peak, it doesn't sweep anything, but it's still liquidity, and there still could be some sort of order block within here, because what happened was it wasn't an uptrend, and then it came down to collect some orders, and then effectively you can consider this an order block, while not in definition an order block, while you'll probably have some other trader telling you like, fuck you, that's not an order block, whatever. Yeah, I still consider it opposing confluence, so that's why I wouldn't take it. So I could have taken that, but it's better to have consistent and good practice instead of just entering off what you feel. Because if I made that a habit where I'd always enter off that, then it would make it so, I've said countless times, that you end up losing more than you win. Damn. Yo, this booth has got air conditioning, look. Anyway. Keep playing it, see what else we can look at. So it's changed direction, it's now coming up into an uptrend. Tap, closure above, but then you got opposing confluence, this fair value gap. That's a sweep. Again, this is fair value gap, tapped in, closure above. I'm not taking it because you got opposing confluence there. Like, this is what I always be on about when I say opposing confluence when you enter, because you could enter here and then take it to wherever, but the possibility of your stop loss getting hit instead of take profit getting hit is more. So now it's in a strong uptrend. Now, see this, that was tap 1, 2, closure above, stop loss goes below the fair value gap. Now what we're seeing is if we are entering off opposing confluence. So we'll go back, see where price is at. Is that opposing confluence? Yes, it is. Actually, no, I would take that. Set it through to here at that white line. That's where the take profit is going to go, because it's filling this triple fair value gap. It was a very short minimal trade, but bang, hit. Now see if it keeps rising up. What do we get again? Waiting for closure above. No closure above. Instead it's fishing for orders. So this is a risky one I'm gonna be taking. This is just like just for fun, because it's in an uptrend, and because there was consolidation here and this closed above. Yes, it's at opposing confluence, but because it's in an uptrend, that's why I'm going to be taking it. So that's where price is at right now, and if we take it up to the next confluence, which would be, I'd probably mark it out to be there, just a bit under the liquidity peak, and then we'll mark it here, play. So yeah, that's why if you enter at opposing confluence, which would be by here, then stop loss got raped. So that's what I'm saying. stay true to your confluence. Now we'll see. Wait. So now we'll probably do like one more example. So there was tap closure below, opposing confluence. That tapped nicely into a fair value gap, and then this came above. But if I was to take that, R&R would be too wide. So yeah, I could take that. You got this tap into the fair value gap, this closure above, take it here, and then I'd keep stop loss. Stop loss can go short for this because there's a very tiny fair value gap there, and then we'll see where we can next take it to. Nah, I wouldn't take that actually. I wouldn't take that. The reason why I wouldn't take that is because of this peak by here, as well as the peak that we just zoomed into here, and that's why I wouldn't take it. So that was just a quick session on scalping. Now all I'd say is go in, have fun with it. Any questions you have, just send them through, and I'll just go over why it's beneficial to go over this, even though that you may not want to be a scalping trader. It's still good to have it and do it because it builds good practice of opposing confluence, where to take your trade into within high confluence areas and whatnot. It's fun and it gets you that market experience. So you can imagine the more that you do this, or even if you want to build off this strategy and even make your own scalping strategy, which I highly recommend you to do, yeah, end of the day, it just builds that XP so that you can get good. That's it. Oh yeah, and I'll make sure to send through, like, I don't know, I actually don't know.